Today is the 10th of May, guys. Welcome to Bovarius Capital Management's live room. To get the disclaimer out of the way, any advice or information given in this room is educational in nature and general advice only, and does not take into account your personal financial circumstances. By viewing any material or using the information presented by Bovarius Capital, you agree that this is general material and you will not hold any person or entity responsible for loss or damages resulting from the content or general advice provided here by Bovarius Capital Management, its employees, directors, or fellow members. Spot currency trading has large potential rewards but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest into spot forex markets. Don't trade with money you can't afford to lose. The website is neither a solicitation nor offer to buy or sell spot forex or other financial products. No representation is being made that any account is likely to achieve profits or losses similar to those discussed in any of these sessions. Past performance of any trading or methodology is not necessarily an indication of future results. This information is for purely educational purposes only. Fantastic. Now, today, I think the main thing that we're going to be discussing, and I think that's going across the board, is the rate decision which we've just seen. I know Paul put out some information just before it came out. Let's just bring up the news. Today, I think the major thing is pound, or the rate decision came out. Now, just to look at what the breakdown is, start to go into these articles, guys. This is for you guys to really get a deeper understanding of exactly what's going on day to day, week by week, because it's broken down. Now, let's look at it because it's crucial for us guys to be understand. The pair's down 1/15% at this 1.5 level. The next level of support is 48.37. Now, so at the moment, it's clearly broken out of a bearish channel, and it's clearly got some weak sentiment off the back of it. Makes sense, guys? Now, on time frame wise analysis, let's just look at the analysis, yeah? So the Bank of England left the rate unchanged, which is what we were talking about, and it obviously gave a strong sterling initially. But what happens is what I was talking about. Let me just show this to you guys on a chart so you guys can see. So strong sterling is here, guys. Yeah, that's the move in the run up to the unchanged rate. Now, as soon as the news has come out, it's pushed it into this supply level there. Can you guys see that? Yeah, and then it's come down. It's come down straight into a buy zone. Can you guys see that? Where it's basically trying to reverse now. Now that is what we were talking about. Unchanged rate hike, strong pound, goes into the key level. Now everybody will be buying it because it's unchanged, guys. And what's happened? The pound's gone down. Now this is the type of stuff that I've gone through with you guys. Non-farm payrolls, rate decisions. This is the type of stuff you need to be analyzing. Now this is giving you a good understanding. We understood that it was unchanged rate hike, and you can see the price has gone up, found orders, and come back down. That's what Paul was initiating as well. Now, just bringing up the news, because obviously we need to go through this in detail so you guys start to understand. Unchanged rate hike at half a base point. The asset purchase facility of 430 billion in corporate bonds, about 10 billion. Now, there was a vote, and the vote has sentiment, but also what happens after the vote in the speeches, because they give hawkish and dovish statements. Now, according to how they are, they're interpreted, and it comes out after the decision, which is what's just been going on now. Now, looking at it, just bear with me. Still in the UK, came down. So, inflation report is expected. They're saying that the members voted 7-2 in the current status. So they voted 7 members to 2. So it's not unanimous, but nearly. They're going to be looking at inflation on the Bank of England lower in the medium term. So these guys want to get inflation down. So if they're getting inflation down, it's definitely going to look to boost the currency over the next few months in the next statement. So be aware of that, guys. Yeah? Now, this is the other thing. This is the report that I'm talking about to you guys. Because what you're doing here, if you analyze this and go through it, so on UK inflation, inflation are the most important and intensive components of CPI appear to have peaked. The impact of past sterling of CPI inflation, while significant, is likely to fade and faster than previous thought. Taking external and domestic influences against CPI inflation is projected to fall back slightly more quickly in February, reaching the target in 2 years. GDP is expected to grow about 1.25% per average, projected GDP growth. So this stuff here is just giving you sentiment for the pound. It's really, to interpret it to you guys that may be a little bit new or thinking this is trading jargon, it's basically indicating CPI is a key figure in regards to understanding how the data's coming out. Yeah, so they're expecting to bring the projections of it to be the data to be a little bit weaker next month. So let's see. So weaker data means stronger sterling on the screen. Yeah, now that's what we've done on the chart so far. You guys can see market's gone up, found some orders and tanked off. Now let's just have a look at what Carney's saying as well, because Carney's obviously given a speech. Yeah, I think the major thing is the dollar has reversed slightly, guys. I think you can see that dollar crawls back towards February highs, guys. So that pullback that we saw about 8 days ago, what I was stating is basically coming true. The dollar's continuing on. It's come back, found some orders, and it's going to continue on. So at the moment, fundamental conditions are quite strong. Hedging strategies are going to work quite well. Thanks, guys. A few more guys in the room, I think. A few more hedging strategies are going to work quite well, but you've got to take into account fundamentals. If you guys aren't breaking down each pair fundamentally and getting to a high level of understanding, you're never going to get to the level where you're going to be fantastic at day trading. Make sense, guys? Now, just looking at it, let's just go into the articles a bit more, because I think this is the stuff that's going to keep us above the rest. Yeah. So bear with me. So this is the inflation report. So it's basically a little bit dovish. I think we're going to see a little bit of a pickup. Let's come back to the calendar now, because we've got some news out now. Not now, in about half an hour. So that's that pound rate decision came out. It all generally came out in line. You've seen a move on the screen for sterling, but to put it into comparison, it's 120 pip move. It's a reasonable move. There's movement on the table there as volatility. A lot of day traders, we need volatility to profit. We like to get in and out. Now, this type of move on these type of days, the profits are on the table, guys. You guys should be making a hell of a lot of money. This is easy volume conditions plus profits, because your focus here is to grow the account, guys. Great. Now, what we've got, okay, today is CPI for the dollar. Now this, okay, couples with US Open as well. So it comes out on their opening bell, basically, just before. So be aware of the figure, be aware of positions. I'm expecting huge amounts of volatility. I'm expecting good trading sessions. Now, London Open was a little bit invalidated today because of the ranges. So I'm expecting good US Open shortly in about half an hour. Yeah? So guys, prep yourselves. Get yourselves in the game. This CPI figure is probably going to come out inspected, but what it's going to do is going to install volatility over the session. Yeah, let's bring up the charts. Let's just go through it as well, because you guys crucially want to see it on the charts. Here's that rate decision. That's a big move there. Look, selling high, buying low. You're in the middle of the range. When this market breaks, you're going to win either way. If you ask me, with that decision and the statements that have come out from Bank of England, I personally think that the pound's going to be going long. It's consolidating to find orders here, but personally, I'm long pound. I think these 134 levels are strong fundamentally. News is only going to hold bias for a few hours, and then it's going to be forgotten about, if that makes sense. And this is what I'm prepping you guys for. Yeah, so let's look. Euro dollar. Euro dollar's been working very well. All the London ranges today were a little bit wide, so I'm not that bothered if you guys weren't trading London Open this morning, because this is one of the most days where you never see the range generally this wide. 24 pips. All the ranges were fully out this morning. 28 pips. They're very wide ranges, so I'm not expecting a lot of volume today, purely because of the fact the ranges are wide. When you only get odd days like this in the year, like 10 or 20 days like this in a year where the ranges are wide. These days, where the ranges are wide, supply and demand works phenomenally well because it goes from the higher to the better levels. It is because it's got a good daily range. Because when the movement's wide, the risk is a bit more. That's why, as day traders, don't forget we specialize in risk management. If you want to be a consistent trader in the markets for 10 years or 20 years, and you've got no capital to open a position, or you haven't got a track record, and you're working with a company that can give you capital to open a position, your opinion is merely worthless. It doesn't mean anything. It doesn't matter how good you are, how good at the analysis you are. If you can't put money behind it, you can't profit from it. Make sense? So do start to get that into account. Treat your capital with like a treasure. It needs to be speculated with. You need to use calculative risk. This is the major thing that I'm finding. I'm thinking a lot of guys, you need to start taking good calculative risks, especially when it comes to trading. Yeah. So London Open is a little bit invalidated today. I'm not that bothered, but I'm expecting US Open to work quite well off the back of it. The ranges are going to be a little bit wider, but they're starting to tighten up a little bit now. Yeah. Now, let's just look at the analysis, yeah? So, euro dollar has finally found a little bit of pull up by the looks of it, yeah? Now, I'm not going to expect euro dollar just to fly back up there. The market doesn't do that. It's going to consolidate and find orders. What I'm going to be doing now is I'm expecting conditions to go a little bit technically. I'm going to start to put in my support and resistance on the 5 days, just so I know if the market now moves out of this 5-day range, is still moving fundamentally. But the more probable outcome, if you ask me as a trader at the moment, is for it to start to go range bound personally. I think it's going to go a little bit range bound. I think the pairs are going to start moving a little bit technically. And like, let's just look at the news as well, because that will help me give a confidence. So from tomorrow, we don't really have any big news. Oh, we've got dollar news tomorrow. Sorry. CAD news, not majorly important, but apart from that, you've got the CPI today. I expect that to come out in figure. CPI does move the market more than expected. It's probably second in line to non-farm payrolls and rate decisions. Third in line, sorry. But I'm not expecting anything massive unless it's a big unexpected event. I'm just expecting volatility. So all you guys with 25 to 50k on account that are hedging, I'm expecting good conditions. You're going to get breakouts, upside to the downside. If you're hedging, it's irrelevant which way it breaks. So start to look at that, guys, with some serious intent. The news comes out in about 30 minutes as well. Now, looking at it, just going back through, because the reason why I want to see is next week, I think we're going to go a little bit quieter in regards to news. Yeah. So there's not. Well, let me just double check it though, just to make sure. Bear with me 1 second, guys. So next week you've got a GDP from Euro. You've got a bit of Euro news next week. And you've got the standard oil inventories. Bear with me. So a little bit of Aussie news. So now, looking at it in the run up to the next 2 weeks, there's not going to be a lot of data out. I'm expecting the market ranges to come down a little bit. I'm expecting us to go into summer conditions. I'm expecting us to go into range-bound conditions. So things like mean reversion are going to hold up a little bit better. But obviously, it could break out. It's just, I think the market's going to consolidate to find orders. We've had a big move. I think institutions are starting to get out of their sell, because why are they holding? They're using the liquidity pool to push it out. That's where the price is going to become a little bit more range bound now. Yeah. Now, on top of that, because there's not like substantial news like rate decisions, FOMC, there's a little bit of Euro data out, a little bit of Australian and CAD news out, but nothing major. So I'm expecting technicals. We're expecting like clearance now. So I'm expecting the market to be range bound for the next 5 to 10 days. Obviously, I don't have a crystal ball, but let's just see how it plays out. We've had big fundamental moves. The last 10 days, 15 days, you guys should have been making a hell of a lot of money. You should be growing these accounts aggressively because the movement's on the table, guys. Yeah, so that's something I'm getting you guys aware of. Next week's not going to be as big fundamental week as it's been over the last 2 weeks. We've had non-farm payrolls, we've had bank rate decisions, we've had oil inventories, we've had some big movement. I think we'll start to get a bit more clarity now. Now, the markets now, looking at it, I think are going to continue to go on. Yeah, if they come back down to key levels, to find more orders. That's fair enough. But I think we're going to see the market go range bound in these areas until we get a bit of clarity on things like Trump. I don't think it's going to be breaking out of these zones because I don't think they're going to want to see sterling any lower. The data's indicating the worst data was pushed it back down. I think it's at fair value at the moment. It's in the middle of the range. So this is the type of stuff I'm getting you guys aware of. After watching this live room for 6 to 12 weeks, you should have an in-depth understanding of fundamentals. Your fundamental understanding about the market should be very, very high. Yeah. So just looking at it, let's come back to dollar yen as well. So dollar yen, guys, is done that rally up, and you can see it's looking to make a continuation. Now, copy that with dollar Swiss because that's giving us a good indication as well. But I think we're in consolidation periods here. Yeah, I'm going to start to put my 5-day ranges back on because if I know it goes out of the 5-day range, I know that it's moving fundamentally. Otherwise, it's range bound. I just got a feeling with the way that there's not a lot of news out, I think the pairs are going to start moving technically for a few 10 days until the news starts to kick in towards the end of this month, beginning of next month, unless there's something unexpected with Trump. I know he pulled out of the Iran deal. I read some article on Bloomberg today about something which there's a guy who basically had a pharmaceutical company which was going to compete with Obamacare. Now, before Trump was coming into power, he was trying to consolidate them out so he could put them into power. And apparently they were paying like £100,000 a month to his lawyer or something to start. So there is obviously some underlying stuff. I don't know. In the run-up to like pre-elections and stuff like that, you could get some unexpected news which pushes it out of key zones. But it needs a bit more fundamental movement for it to, I think, continue to go down. I think it's more likely to reverse. Yeah, so continue on the way it's going. So looking at it, pound yen. Let's just come into some levels. Yeah, pound dollars move quite well. A lot of clients have made money on this today. Yeah, I think personally now, I think you're going to see a little continuation. It's a clear battle between buy and sellers, but you can see this price action here looks quite bearish to me. I wouldn't be falling in love with the buy, but it's clearly picking up orders down here in these levels, 134, 134.96. Could breach the level slightly before it continues to go up, but I'm favors towards the buy. I'm just looking at it from trader's point of view. Is it going to go any further down? And I'm trying to buy and catch the long-term trend. I'm expecting sterling to touch 140, 142 and stay range bound in these levels until we sort out what's going on with Brexit. So let's look at euro dollar as well. Let's come into the levels. Euro dollar's got good movement here. It's gone a bit quiet pre-market just before it opens up, but I would definitely be selling up here and buying down here. It's at good levels, if that makes sense, guys. They're reasonable. That in turn it looks quite good if you ask me. Let's look at some of the other pairs here. That's good for me. Dollar Swiss. There's some strong buy zones down here. Obviously, that's the zone where I wouldn't be falling in love, but you know that it's bouncing off. So it's good zones there, guys. It's good supply and demand levels. Yeah. One thing I want to touch on as well. You see this level where it bounced off there? That's clear supply level, guys. That's clearly markets picking up orders. These supply and demand levels, guys, we don't make them up, yeah? They're to give you just an indication, because this is crucial. Supply and demand is different to support and resistance. Supply and demand is where the banks are placing their orders to build positions. When you trade £1 million, £100 million, £1 billion accounts, you can't just put it in one order. A, all the other banks know where your order is. Makes sense? And B, it's easier for them to hit it because if they know where the prices are, it's easier for them to manipulate. So what the banks do is they specialize in something called building positions. Building positions, now this is known by anybody that trades on a large level. If you're trading a 6-figure account, you're involved with hedging or building positions so that you understand direction. Nobody just outright gambles on the price. You build positions. Now that's what the banks do. That's why their banks will never ever execute at market order. They'll never just look at the price and get in. They will always place an order. That's why when the price comes in and pushes up and collects orders, it comes back down. Can you guys see that? Now that's what order flow is, yeah? Order flow, supply and demand, is where the orders are probable to be sitting. So where there's a possibility from where the price reacts. Now, initially you do have to trust the levels a little bit blind. But what you'll find is where you don't trust the levels in the mean, in the middle, the outer levels hold up phenomenally well, especially during news events when they get pushed into it. This is a prime example. 11:30, the rate decision come out, unhiked, strong sterling, shot straight into the supply level, and it's given sentiment. And all you retailers are buying it, thinking that it's going up because of the uncertainty, and the pounds come down for orders. Now, that's what I wanted to get to you guys. We've done it a few times, CPI, non-farm payrolls. So yes, fundamentally, it should be going up, but it's found orders and it's reversed. Does that make sense, guys? You guys need to get that home on. If you want to trade fundamental events and you don't understand where the orders are, it's like going into battle in the dark so you can't see, like having your eyes covered. You're probably going to lose, and that's the matter of fact. The quicker you guys can pick up these orders or where these orders are, the better you will become as a trader. The more consistent you'll become. Yeah, and that's what this is all about. It's all about consistency. Want you guys to repeat this. I want you guys to get profitable and consistently repeat the process, because if you can't repeat the process, you were either lucky or you will fall in love with the result. The major thing I'm finding is some guys as well, you guys are falling in love with the result. You're having a big win or a big loss, and then you're either giving up or enjoying the fruits of your labor. I understand that, guys, yeah? But we're after consistency at the end of the day. We want to get paid every single day. We want to make money day in, day out. Have your odd days off. Control yourself. Don't get me wrong. You can't trade every single day. But as somebody in my shoes, my earning potential is uncapped. I push the button. I understand my risk. So for that instance, I know the remuneration is all mine as well. It comes to me. Nobody tells me what to do. Nobody tells me where to go. The capital comes straight back in. Now, that's the crucial thing. That's why I fell in love with trading, guys, because where else can you go and make these kind of figures on the screen? You tell me, I'll get involved with it. But there's nowhere else. The reason why I focus on FX is because when I want to open 1,000 lots at a time, and that's £1,000 a point, it's easy to get in and out of euro dollar. No problem. I open the trade, it gets filled, and I'm out. When you try and get that out of a AIM stock and you're trying to get out of 1 million plus units of stock, good luck, guys. That's why, just like giving you guys a bit more understanding about the thing. Stocks at the moment, this is a major thing I want to touch on as well. Stocks are generally risk on, guys, yeah? They're bought by institutions. Buy on the low, sell on the high. When you get to the high, you shouldn't be buying stocks. It goes risk off. Institutions don't buy because they're looking to take their profits. The problem is at the moment, if Trump comes in, it's weak dollar. It's going to push the stock markets up even more. But that's where there's finite things that come, unless he comes in and creates a war or something outrageous like that. But no one's got that crystal ball that we keep going on about. So you can only trade what you see and trade what you understand from the news. That's why I'm playing on you guys to read the news. If you guys don't read the news and you trade, it's like you're boxing without gloves on. It's going to hurt your hands, guys. Yeah. This is the type of stuff I want to get you guys second to none. Like, just to get a little bit of feedback. I know some of you guys are a little bit new to the room. Some of you guys are a little quiet. Like, I know Kennedy and a couple of you guys. Kennedy, what's your fundamental understanding like now after these sessions? Be honest. Can you hear me? There's a problem with the mic. Ah, very good. Ah, good. So, Kennedy, are you understanding a little bit more as well, just to touch base with a few of you guys? The news comes out and it pushes the price into levels. Yes, good, Kennedy. Fantastic. When it pushes it into the levels, what you guys need to understand is it collects orders and reverses in your favor. Now, that quickly can put you off emotionally, because some guys, what happens is you guys win and you lose. When you win, you get happy. When you lose, you get unhappy. You need to make it emotionless, yeah? We had a client the other day that's trading quite big volume turn around and say, oh, I'm doing it on real funds. Listen, real funds or not, yeah, you should not have any emotion with the capital. The capital should be emotionless. If you're trading something with emotion, the amount on the risk is too high. Happens to me as well, especially when I'm trading big funds. I get emotional with the trades. You have to make decisions. You have to snap out of that. You have to understand. You have to make the decision for the fact of what the market's telling you, not because of the emotion of you're losing or winning money, because you won't do it long term. Then you're doing it. It's a little bit like you're not actually doing it for the passion of the market. You're doing it just because you want to make money, and that's, if you do this to make money, you're going to lose, because the bigger players will confuse you and push the price round and take your money, because that's what the market is. It's zero sum. When we win, we're hitting retailers or we're hitting the banks as of such. So people that make poor decisions. It's a matter of fact, when I win and the money I make, most of my money is made from trading. Yeah, so the money I make, I'm hitting other retailers or the banks that are losing or making the wrong decisions, guys. So there is a percentage of guys that do hit and do consistently show yields. And it's about discipline. That's the major thing. I'll tell you one thing now, yeah? If you guys want consistency and discipline and you don't use risk management, it's never going to happen. If you guys are risking like 20% on a trade, on one trade, on a thing, that's why I hate the smaller accounts, because they give you a full sense of security. When the account's so small, you're only winning or losing a cup of tea or making a cup of tea. And what it means is it doesn't hurt you. When you lose or win 100 or 50K or 100K, it's a lot different, guys. That's the difference that it is. And obviously some guys, it's not for everybody at the top scale. Some guys just can't gamble. They can't afford the speculation side of it. I'm a calculative risk. I take calculative risk. I like the odds. I like the analysis. I'm putting my money on the line because that's how I make my money, guys. If you think that I'm going to take every single trade and win every single one and not lose every single one, guess what? You're in la la land, because it's impossible. It's like being a footballer and not getting an injury, guys. Yeah, so just really to recap, I'm going to keep this live room short as well because I just want it to be about the fundamentals. We're going to start to do individual sessions on strategies and stuff like that, which I'm sure you've seen Paul starting to bring up, but it's here just to really crack down on fundamentals, clean you guys up on it. Yeah, so we've talked about euro, sterling and dollar, the major pairs that you guys are looking at, the major pairs that you guys are trading. Yeah, now just looking at euro pound, because I like euro pound because of the risk. Yeah, just bear with me. Let me just bring it up. Euro pound. Euro pound is working all right at the moment. Look at this whipsaw off sterling, yeah? It's gone straight into a key level. I'm expecting that to continue to push up. But generally, there's good trading conditions, guys. US markets opening up soon now, in the next half an hour to 40 minutes. I would have a strong look at this. Easy volume, easy profits, yeah? All right. Just to get a little bit of feedback from you guys, yeah? Gennady, is there anything that you want me to go through? Anything that you want me to look at in depth yourself or go through at the moment? I know any charts, any levels. John as well. Anybody else? I know there's one or two new guys as well that have come and gone. Gold. Okay. What would you like to know about gold? Direction. Gold. Let me just give you guys a quick look at gold, yeah? Gold is, how shall I put it? It moves. It moves phenomenally well, yeah? Its daily ranges are phenomenally high. If you look at gold's daily ranges movements, but you guys can see it moves one way or another, yeah? Now, you should only be trading gold if you've got large accounts. You do get rebates on gold. If you trade gold £20 a point, you do get $10 back. If you trade $10 a point, £10 a point, you do get $5 back, guys. So gold is easy to trade for rebate, but you need bigger accounts. It's very unforgiving. Now let's just look at gold. If you guys don't understand, gold moves inversely to the dollar. Yeah. Now looking at the move here, that's a big move, 600 odd pips on gold. Yeah. That's the move that you've seen from the strong dollar. Now, where the market's consolidating in these zones here, yeah, personally, I think it's either going to start to continue making moves on, but it's all data dependent, guys, if you're asking me direction. But if you ask me, it looks fundamentally, I think with the economy being so high, I think gold should be a little bit lower, maybe 1,000, 1,100. Look how high the markets are. And I think it's really market dependent, bringing up US markets. That correction that happened over the last few months is basically eradicated nearly the whole move. Not a whole move, it's done 30% of the move. I think that's going to make a higher high, guys. That was that 10% correction that happened recently. That was quite a big correction in January, February. That was a big move to the downside, but you can see it's holding up. Institutions are buying here, guys. The prices come down, they're seeing value. The only way this is going to turn, if you see this, it's making a pattern now. I think it's going to be an ascending pattern where the price is compressing to find orders. It's either going to go bang and go up or go back. Now, this is the reason why I'm bringing it up is because it's directly correlated to gold. Yeah, if the markets are doing well, that means the dollar's weak and gold will be up, and vice versa. It's directly correlated to gold. So looking at gold fundamentally for you guys, I think on longer terms, if you look at it, even looking at it on a long scale, like that to me, if the markets continue and Trump comes into power, I think you're going to see gold in these levels down here. However, if you get the crash or the correction, you're going to see gold rally back up. So at the moment, gold's in no man's land as a day trader. I personally think at the moment that the fundamentals and the technicals, it's going to be range bound. I'm looking for range bound just to look at shorter term levels. It's in these areas here. So 1350 to 1300. That's a massive range for gold. I think it's going to stay quite range bound over the next few weeks and months. But looking at it, it is near the high. If it's going to come down and markets continue and Trump continues, that's going to see. But you can see that it moves off the back of big fundamentals as well, guys. I think it's going to be range bound in these areas until we get some clarity. Maybe push down a little bit if equities continue. But let's look at some smaller levels on gold, because I think that's what you're getting at, Kennedy. But looking at it, I'd be buying it down here and I'll be looking to sell it up here. But be wary of the sell, because obviously if the dollar's strong, it's going to continue to go up. Yeah, so do be wary of that, guys. Yeah, I think, Kennedy, has that answered your questions? Got you a bit of answers? Everybody else as well in the room? Everyone good? Everyone had some nice conditions? I know some clients had some good profits. Stephen and stuff like that profited quite well today. So what I would say is, just looking back as a little bit of a summary, I'm expecting good London Opens tomorrow. Yeah, not a lot of news out. Expecting the markets to start moving fundamentally again. Yeah, but what I'm going to do is I'm going to wrap it up for today. If you guys got any questions, guys, do keep sending your P&Ls in, yeah? I'm auditing P&Ls. I'm going through them consistently. I'll give you coaching. I'll eliminate losing trades. So, guys, keep sending me your P&Ls. Get up to targeting at least 400 or 500 lots a month. $2,000 to $3,000 in rebate. That's what you guys should be aiming for, minimum. Anybody with 5 or 10K. If you've got the slightly larger on account, 25 to 50K, you need to be targeting 200 to 500 lots a day. That's what industry standard is. That's what a lot of guys in the industry can do and are capable of doing, guys. Yeah? So let's wrap it up for today. We'll be in touch tomorrow. There'll be a live room. Any questions, any queries, anyone that wants any one-to-one coaching, emotion, looking at positions, maybe working on entry, anything whatsoever, just get in touch. Send an email, give us a call on the number. All you guys have got our numbers. Happy trading, and we'll pick it up shortly, guys. Fantastic.